If you're trying to decide between FreeAgent and QuickBooks for managing credit, you're in the right place. But before you commit, there are some key differences that could save or cost you time and money. And stick around, because at the end, I'll share an alternative that, after testing all of them, I found to be even better for credit management. First, let's talk about credit tracking. QuickBooks gives you more control over supplier credit, with features like credit memos and the ability to apply credits directly to invoices. FreeAgent, on the other hand, automates much of the process but lacks the same level of detailed credit tracking, which might be an issue for businesses handling multiple suppliers and credit arrangements. Next, credit limits and risk management. QuickBooks allows you to set customer credit limits and get alerts when someone is exceeding them. FreeAgent doesn't have this feature, which means you might be extending too much credit without realizing it. If cash flow is critical, that's a serious drawback. Another thing to consider is late payment tracking. QuickBooks has automated invoice reminders and finance charge calculations for overdue payments. FreeAgent does send reminders, but it lacks the ability to automatically apply late fees, which could impact how efficiently you manage overdue accounts. Then there's integration with credit management tools. QuickBooks integrates with third-party apps that provide deeper insights into credit reports and risk analysis. FreeAgent's integrations are more limited, which means if you need advanced credit data, you might find it lacking. One more thing. User experience and automation ***. FreeAgent is built for simplicity, which makes it great for freelancers and small businesses that don't want to mess with complex credit tracking. QuickBooks, while more powerful, has a steeper learning curve. So, if you want automation without micromanaging credit, FreeAgent might seem appealing, but that comes at the cost of missing out on key credit management tools. Now, both are solid platforms, but when it comes to managing credit effectively, they each have limitations. After trying them myself, I found a better alternative that offers stronger credit controls, automation, and a more intuitive experience. If you want the best free trial and exclusive benefits, check out the first link in the description.